All right, everyone, here we are with another video with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. It helps out the YouTube channel and that you appreciate the effort and time I put in to making my content and my videos. So I really appreciate that. It means a lot to me. And stay tuned towards the end of this video because we do have a ticker symbol you may want to add to your watch list apart from the one we're about to talk about. So let's watch this short clip of Jim Cramer putting his input on what he believes. And I'm going to go over it in just a second.
Talk valuation. At its last private fundraising round in January, Roblox raised over $500 million at $45 a share. Going to the direct listing a couple of weeks ago, that $45 level was the reference point. That was nice. But this thing exploded right out of the gate, with the first trade coming at $64.50, unusual for direct listing. The darn thing spiked to $79 last Wednesday before pulling back to the high 60s late last week and then bouncing to $70 today. At the current price and using fully diluted share count, Roblox is being valued at about $45 billion. Because so much of their money comes from subscription, I think it makes sense to judge this stock on a price to bookings basis, not price to book, but bookings. Based on the limited analyst coverage, the Wall Street consensus is for the company to generate $2.71 billion in bookings next year, meaning Roblox trades at a little less than 17 times next year's bookings. Pretty expensive, but still in line with something like Snap and a lot cheaper than Unity software, maybe the closest comparison, and one that has taken a lot of millennials by storm. You ever talk to millennials, and I do, they always like Unity software. This is better. Putting it all together, you got my blessing to put on a position in Roblox right now, right here. Although I'd like it, of course, at a much lower level, but this is the real deal. If it keeps climbing, though, I wouldn't pay more than $83.50 for this one, which is roughly 20 times next year's bookings, at least not until we get more visibility into how they see the rest of the year playing out. The bottom line, Roblox could have a very choppy year once the economy fully reopens. So as much as I like this story, please don't buy it unless you're prepared for some turbulence when that happens.
So he goes ahead and says, Roblox is benefiting from the shutdowns, people staying in-house, at home. But once everything starts to reopen, there's going to be less time to focus on Roblox. But something that was really interesting to me is how he said that most of their revenue is coming from subscription services. So the subscription services is a big indicator of how much, revenue and net profit this company can build over time. Now, I like his approach, and he's talking about turbulence to come. He's basically saying, there's an opportunity right where it sits because it seems to be kind of sitting sideways, which we're going to pull up the chart in just a moment, but that there could be some turbulence of this pulling downwards towards maybe $50, $40 a share. I think that's kind of bold for me to say that, but somewhere around that area, closer to what it was actually being valued at before it shot up to the 60s as it started trading. But let's go ahead and look at it here. So basically it picks it up here starting off at around $69, which is right where we're sitting. This is why he's basically saying, like, right where it's sitting at right now, and plus the previous lows here of 66 and down here at 66 as well and some change are all pretty much sideways movements. So if this was to go downwards, you need to keep in mind that you're getting probably one of the best prices at the IPO level, and anything lower, it might be a temporary pullback, and be prepared for that turbulence. And my understanding from what he's saying, and this is not financial advice or any type of like position to tell you, buy, sell, or hold a position in, RBLX stock, Roblox Corporation. But what I'm interpreting, in my opinion, is that he's saying, if you want to get started on your position, you can get started now just in case this goes higher. And if it pulls back even more, be ready for it and have a mindset that you're going to go ahead and average down. Now, he's saying that it has a market cap where it's being valued right now of $45 billion. So there's still some room upwards. So he's saying that even if there's turbulence, there's room, because he's valuing it almost at a market cap of $45 billion, and we're still nowhere near that. Now, what's interesting to me, how he's talking about it, he's basically saying like a bear case scenario is bound to happen. And if this was to get crazy and run up to the 80s, I'd be a little bit hesitant. That's just the way he's approaching it. And it makes sense, but there's somebody that's doing the opposite, and he was kind of in a confrontational approach with Cathie Wood, and that's who we're going to talk about now. And Cathie Wood makes bold statements with the purchases that go on in her ETFs. And now Jim Cramer, if you listen to him in more than one video, he kind of, I'm not saying praises her, because there's no such thing as praising another fund manager or another investor, but he's starting to respect her when it comes to what she says and her influence and approach, and not just influence to tell people, but her approach on everything that she goes ahead and does with her team on research to give us as investors in the public, retail investors, institutional investors, and everyone else in the stock market, an idea of what most of us don't see. Something that Cathie Wood has is a great team of analysis plus her insight, seeing beyond what the charts see. And that's something that is an art, and it's very risky because sometimes she puts herself on the line when things are looking really bad, but she's looking way ahead. So I kind of respect that on her end. We'll see how long it can last or how good she does it, or if she's going to do it, this good every single time. That just means that she's always been correct and she has a perspective that many of us are overlooking. But if we pull up here her position, right, with the ARK W ETF, Next Generation Internet, this is one of the ETFs I have a lot of respect for because these are the most disruptive companies overall within each of these sectors. Now, she may not have all the disruptive companies all at once here, but she believes a lot in these companies overall, and they are changing the game within the sector that they're in and what they're doing. So this is very interesting, and it's right here. I remember the first position was like 200,000 or like 150,000. I'm not quite sure. And since then, it's been rising. And the first time that they bought, I caught it right away because I always do the Nano Dimensions videos here, and I always talk about Nano Dimensions and the position holdings. And I saw Roblox, but I wanted to see how long they would hold it, or was it going to be a temporary thing? Because sometimes that's what Cathie Wood does. She kind of like puts stocks in the testing trial phase, and once they break out of the 50 mark and go up here to 40, they usually stay, or they start edging off of their position, shaving off. But I believe that she's in this one for the long run, and if Jim Cramer is saying that, I'm looking forward to see if he's correct that there might be some turbulence and pullback, how Cathie Wood reacts, and if she's going to load up more or sell and then come back in again. That's what I'm really looking for. Now, I could see this falling anywhere between, like I said, $40 to $50 worst case scenario, especially since it's already touched the 60s mark before. Now, the highest that it reached was up here at the 80s, and the fact that we have Jim Cramer giving it a valuation of $45 billion, I mean, this is kind of almost at a discount based off of his analysis and his way of expertise when it comes to looking at stocks. He sees an opportunity, but he's saying, hey, that's the valuation, but we won't see that right away. There might be some turbulence for this company. And also, there's two ways to read into it. Bad news because the stock might go lower if you're already in it, or good news because you're going to be able to obtain more. So I just wanted to go ahead and give my insight on Roblox Corporation and go over what Jim Cramer says and the bold statements that Cathie Wood is making by her purchases. And I think this one has some upside potential, close to $80 to $90. And don't take my word for that. Do your research and do your due diligence. But I just wanted to go ahead and share with you guys because I've had a lot of investors ask me what I thought about this when it was coming out for IPO day and stuff like that. And I try to stay away from companies like these that run up, like DoorDash and, what was the other one that came out at the same time? Oh, Airbnb, because they get very volatile until things finally settle in. They need to calm down, and we're still nowhere near that for Roblox. Roblox Corporation, RBLX stock, has room to pull down, and we're going to have to see how that plays out. But I don't think that's going to be a terrible pull down that it's going to stay at. If anything, it's going to be an opportunity. And from there on out, we could see growth over time, especially with their subscription services and everything that comes entailed with this company. I mean, there should be some type of growth over time. Cathie Wood is starting her position. Jim Cramer's talking about the short-term possibilities, but he's also looking at some upside potential year over year. We're going to have to see. As always, guys, thank you guys so much for watching. Tune on in towards the end of this video because I have a ticker symbol you won't want to miss. You definitely want to have it on your watch list. And if you learned something new, subscribe to the channel. Don't forget to click on the bell to not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watch this video. Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. And all I ask for in return is for you to smash that like button to let me know you watch this video and stay tuned on in for all that we have to cover. Let's jump right into it. So I have here the website to ChargePoint CHPT stock, and I definitely recommend every single viewer and investor to go check it out. It'll tell you much more information on the company, but I love their slogan right here. The electric revolution is here, and that is so true. It is here. It's just getting started. And you want to be aware that when you're investing in the EV sector, whether it's the cars or the charging stations, you're investing in the future. So it's going to take time to see your returns really grow to their full potential. Now, a lot of investors will look at this chart and say, well, we're sitting at $24 and it hit a high here of $50. Yeah, it hit a high there because of the speculation and hype because of the merger. This is a SPAC merger. You always want to remember that. But Charging Point has an opportunity to get a market share and a piece of the pie of the bigger picture. So I mentioned this one over at the Patreon this weekend, and this is what I said. And if you guys want to know what stocks I'm watching weekly, you can join us over at the Patreon. It will be down below, the link in the comments section. It will be the pinned comment that I'll have there down below. So I basically said everyone focuses on the EV car makers, but forget to focus on the source that can give the EV cars the fuel and drive it needs to perform its purpose, which are charging stations. ChargePoint is one to watch, especially that we saw it in the most recent pullback, how it reached below $20. It reached $19. I posted about a snapshot of the chart, which you can see up here. If it can reach below those numbers or touch them again, it will be something to pay close attention to. ChargePoint is not the industry leader, but it will get its piece of the pie when it comes to the market share in charging stations. Okay, that's going to be a big deal in the future. This is the future gas stations. You always want to remember what is going to give the fuel to these EV cars. And it's these charging stations. Yes, you can charge from home, but charging stations will charge cars much faster. And as batteries get more improved and developed, they're going to become so much better that you can actually stop at a charging station and not feel like you're stuck there for 30 minutes, 40 minutes. Now, this is my question to those of you that own an EV car or know someone that owns an EV car. And I want to ask you guys, how dreadful is it to stop at a charging station right now in these times? I know people that have stopped and then they do like little, stories on their Instagram or Snapchat, and they go ahead and they post, man, we all hate ourselves, or like they post something like just being sarcastic, and it's a whole line of Teslas at a Tesla charging station just waiting for their cars to charge, which takes about 30 minutes to 40 minutes. When charging stations can start charging in 5 to 10 minutes, it's going to change the game. And not only that, but people charge at home because they have time to charge at home, because they go to work, they come back, they leave it charging overnight, and at some point that's going to get kind of redundant and it won't be necessary anymore. When charging stations will be out there, you can just stop and get your 5-minute charge, and it's going to give you enough for the next day or next 2 days instead of charging slowly at home. And it's just going to be a shift. There's going to be a transition once batteries get improved, charging stations get improved, and the time becomes less and less. It's just going to be so much more convenient than having to charge overnight. And especially if you're traveling, it's going to be so much more convenient. So that's going to be a big deal. ChargePoint is going to have a piece of its pie. So definitely check out the website. That is one thing I do recommend, so you could see everything about it. And I also want to pull up here another picture of a screenshot that I took. And a lot of people would probably be a little bit concerned about their financials. And that's why I stated earlier, this is where you need to realize that you are investing, right, in the future. And ChargePoint is an electric vehicle infrastructure company based in Campbell, California. ChargePoint operates the largest online network of independently owned EV charging stations operating in 14 countries and makes the technology used in it. So I want you guys to be aware that they're the largest online network, but they're not the largest charging stations. Okay, there's other companies that it's competing with, but like I said, it's going to get its piece of the pie. The financials right now will never look so strong because, like I said earlier, how many people do you guys know that feel that dreadfulness when it comes to charging their cars? Now, my other question is, how many people do you know that own an EV car? Do you own an EV car? And that's where you got to realize that you're investing in something that hasn't even maximized its potential yet. It's just getting started. So this is the time to start watching this stock. I mean, the closer it gets anywhere below $20, the more attractive I believe it looks. This does have potential. We already saw it reach up to 50. It can, for all that, it can probably break out through that in the near future. But, you know, one thing is you need to be prepared to always believe that you're investing in the future. You're not investing in now. You know, you got to think about how many people own cars and how many people need charging stations right now. But then you also got to think, well, how many people will own EV cars and will need charging stations, not now, but later? And that's where you're going to find out why this has so much potential. And this is definitely a stock you need to have on your watch list moving forward. As always, guys, thank you guys so much for watching, and let's make some money.